All righty. Doc here from North America. Good morning, good afternoon, and good evening. All right, let's see what we got going on today. Let's put the dollar index up there and see how they're moving there. I know I saw the, what was it, the euro jumped back up on Friday. We talked about that. They were pushing it into the sell. They were trying to drive it down. I was questioning the reality of interest rates and the inflation and the way the central banks basically are, reaching for gold like there's no tomorrow. At the same time, they sell it down. They keep it cheap. They deliver it slow. Yeah, I mean, there's just all kinds of wonderful magic they're playing. I mean, that's the only way to really describe it too. They are just playing with it in a very delicate, not like a childlike way, but I mean, trying to deliver, trying to buy, trying to readjust. That's what quantitative easing is all about to begin with. Stability. And so in the end, we've really turned. We really have turned into a point now where we're very, it's a very elusive moment in world financial history. I think that's the best way to. Hey, Robin. Hey, Metho. How you doing? I got it rolling along a little slow today. And so at this point, I mean, just literally what we're watching now and what we're seeing is, just, we have to realize that they have control, and they're not letting go. And that's because there's no other game. I always say this: there is no other game in town. I have a friend that's trying to tell me for a long while. I'm talking about decades, that they're going to get away from the dollar. The BRICS are going to be successful. China and Russia and all this, and I keep on saying to them, I don't see what you're talking about. The best I see at most right now is that they're delivering raw materials as a currency. And so, uh, what it really comes down to is, I have to respond. Let me just respond on this, and I'm going to get right back to you. Mm, webinar. And so, what it comes down to is quantitative easing. I guess the whole thing would be is hard and tight done at and so in the end result is quantitative easing. I got rid of that text now. Quantitative easing, the objective of it all was stability. Okay? And so the objective was they took the existing system. Okay? You have to look at the big picture at this point to understand where we're at right now. They take the whole system. The world goes basically bankrupt. And the only reason that the United States is not bankrupt is because we have the best financial system that works. I know that sounds condescending, or it sounds like ignorance, or I don't care what you want to think what it sounds like. It's just a fact. It's not much of a. It's in other words, you can back it up by mathematics. You can back it up by the proof of it all. 300 plus, almost 400 plus million people seem to have 25 to 50% of the production of the world right here. Do we really have like the best weather and the best minerals and so forth in the world? No. We're just we have the best legal system, as much as it looks upside down at the moment, more than ever before it looks upside down. We have the best financial, political, economic, sociological system on the planet. What it does is it preserves equity. What it does is it allows growth, faster growth, greater growth, more growth than any other system on the planet. That's why after, just 300-400 years, we have a GDP and a cash flow. You can look at it either way. You can look at the cash flow that we have. You can look at it, the GDP that we have, the innovation that we have, the military power that we have. All of it combined together is because of growth and freedom, not because of dominant dictatorship. Like, look at Russia's a perfect example. You're looking at a live, unfortunately, what would they would call it, a live, fatal, or I guess you could call it, or dangerous experiment going on right now in the center of Europe. Europe moved into a level of like a stasis after World War II. And it's trying to be modern. It's trying to honor laws and so forth. But basically, it is more socialist, and so it kind of takes that freedom away from creativity and development and evolution and the whole bit. I mean, when you really think about it, Steve Jobs, what's his name, Bezos from Amazon, Jobs from Apple, Elon Musk from South Africa, slash Canada, and you could go on, Bill Gates and Ballmer and Allen. You could name all these people that came from nothing and are worth incredible amounts of money, not through killing and pillaging and so forth, but literally through growth and innovation and development. Wozniak and so forth. I could go on about talking about people. Ellis, they didn't have these billions and millions. They took a strategy, an idea, a legal system that justified it. In other words, laws that allowed growth and creativity and evolution, and they made money from it. Okay, and now those things are stopped. Almost, look at the world. I mean, Samsung is pretty impressive, but still Apple's the number one phone, which is sometimes hard to believe, but it's also a different technology too. They write their code. In other words, they do their software into the chips itself on Apple. That's what's the uniqueness of Apple. It cuts down on the hacking and so forth. In other words, it makes it very hard for, let's say, things to go wrong. So anyway, you go to the economic system itself and you look at it and you go, okay, what you have here is the U.S. has this big cash flow. Why does it have this big cash flow? And so in the end result is we can skip why they have the big cash flow. I just described it, basically. That's the mechanics of it all. So they have this big cash flow. The world goes bankrupt from a U.S. invention, no less, CDOs, collateralized debt obligations. And it crushes entities, financial entities that we thought could never have a problem, like a Lloyd's of London, a Bear Stearns, a Lehman Brothers, Merrill Lynch. I could go on and on and on. Deutsche Bank. These are entities that you would think that could never be harmed in a financial crisis, but the crisis was so great because of the CDO market and what the Congress allowed to go on with the CDO market that it crushed the world financial system. And so, now you fast forward to you go, okay, well that's great philosophically. How do I make my money from something like that? How do I make money every day when you're looking at this big philosophical thing of the last 15 years since 2008. And basically what it comes down to is, free markets, free people. The less a government influences who's the winner and who's the loser, or which product is the best product versus which product is the most dangerous product. That's the difference that they've been doing, and that's the sad part, is that they've been deciding what is the best product, not allegedly under the guise of what is the most dangerous product, which is the most unhealthy product, that type of thing. And so, you fast forward into our markets today, and you see like the dollar here, slowly coming down. You see it on here in J4X here on the weekly. You see that slow march down. It doesn't seem too slow at the moment, but it is slow, and it's taking its time. And at the same time, you see it in the financial markets and so forth. The Dow down 8+% last year. The NASDAQ, which is types of innovation and growth, of the modern economy, down over 30 some odd percent. But it's all propped up by the Federal Reserve. And the Federal Reserve at the same time has crushed the metals market. And then we see the crypto market where like a Bitcoin is hanging around 16,000. And it just, even with that industry group having major problems because it's not clear how it legally is functioning to begin with. In other words, the rules are not very clear. And from those not very clear rules, I just saw, was it Celsius, or there's another company like an FTX, I guess. They have it in their writing that if you put your cryptos in their wallet system, they actually own them now. And you don't own them anymore. Why people do that is beyond my imagination. But that just shows you how the FTC, the Federal Trade Commission, not the Futures Trading Commission, but the Federal Trade Commission, is not doing its job. It's not watching how, money is and investments are being used and moved. In other words, they just allow it to just float away. And so, you look at it and you go, okay, this is, confusing. And then I can go buy a stock or buy gold, and I understand that. You can hold it, or you own it, and it's in your broker, and the broker is forced to, it's yours, not theirs. Whereas in the, in the crypto universe right now, anybody with a wallet or exchange type thing, when you put it in their hands, it's theirs. It's not yours anymore. Even with you as the person owning it at one point and buying it with your money, it's not yours anymore. So, that's how bad governments function sometimes, and that's a perfect example of it right there. The Federal Trade Commission should have been in there, automatically treating it like a real business, a real entity, a real equity, and not worrying about all the other things. But these political games are going on because we've had a pretty corrupt political system at the moment. It's cleaning itself up. You're going to see the changes we just did over the last 4 days, deciding on a speaker, has reinforced cleaning that mess up. I know that the media doesn't see that because, again, the media is controlled by the corrupt side of the political spectrum at the moment. It'll go away. It'll clean itself up. That's the beauty of the American system. It will clean it up without killing somebody. Well, let's look at Brazil. Brazil's a perfect example this morning. The election was obviously not very clean. The runoff was not very clean. The backers of the party that lost, storms the palace and the buildings and so forth, and is demanding the army to have a coup. And people are being arrested and probably killed and hurt and so forth. And we try to remove that. In other words, that pretend thing of January 6th of 2 years ago, the person that died was from a heart attack. The injuries were nowhere near what that was described. Matter of fact, it's been thrown away now. Now that they're not in power, the Democrats have basically thrown that whole thing away now. It doesn't exist. And all of a sudden, Biden now is down at the border. We've had 5 million illegal immigrants come across the border in 2 years through Mr. Biden. And now he's down there saying, this is all wrong. We need to fix this. It's because the adults now have taken control of the one part of our government. And so they're going to be looking at the laws that have been broken and say, hey, we don't, we're not pulling guns out and shooting them. We're not hanging them. We're not throwing them in, detention and so forth. Not like the Democrats try to do to you here in the States. But, and so how does this all relate to the financial system? Well, they run the financial system. They have no choice. When someone has the power to raise taxes on you, to tell you what you can invest in and what you can invest in, what you can manufacture, what you can't manufacture, that gives the politicians a lot of power. And there's no way of taking it away. And when people get confused and say, I don't want to hear about politics, I just want to talk about finances, it's like you don't have a choice. And I mentioned this last week because things were turning in this direction. You don't have a choice. They're all the same. And if you don't believe it, then you don't understand the financial markets. And that's really what it comes down to. So what we'll do now is we will now, after me going on this rift or crazy tear about trying to explain what it really comes down to right now, you can see the dollar is moving down. It should move down. It's overvalued. But the world reached for it because interest rates rose, and you should get some type of return when you invest. And for most of you sitting out there, you're saying, what do you mean by that? Well, Europe for something like 9 years was paying no interest on money being invested. Europe was, and a lot of the parts in the world were doing the same thing. They were basically taking your money and making you pay them to take your money. That was really weird. Is the idea that you would buy government bonds, and not only don't you get a return on your money, in other words, they give you some interest for taking the risk of buying their bonds, you had to pay to buy their bonds, which is insane, totally insane. And the conversation I've had all these years about that, makes it very clear that it is insane. It's stupid. It's foolish. And then when you go and try to understand the gold market and, where gold is trading at under $2,000 an ounce, but somehow, Bitcoin can trade at $16,000. It shows you the differential. It's almost like an answer to the metals market, understanding the crypto market. That's why I've always said from day one, since the crypto market here got going, I've been like a very big supporter of, I believe cryptos are a legitimate equity. They basically do the job of what gold should be doing, but it can't do because the central banks are buying it for themselves and pushing the price down at the same time, which is kind of almost against defying logic, physical investing. How can something that's in demand go down in value? It's because they limited the way people can take delivery of it. So they're taking delivery of it, but you can't take delivery of it so easily. You can't exercise. You can contact our banks here in the States to buy metals. Sometimes it takes 6 months to a year to get it. It can take up to 2 years. They've told the Federal Republic of Germany, when they asked for their gold back, they told them, yeah, we'll give it to you in 3 years. It's like, I don't know, it was like 90 tons. We ship, billions of tons every day around the planet. They can't move 90 tons like in a week. I mean, it took a year and a half for them to accumulate the 90 tons so they could deliver it. So in the end result is this is a very odd explanation of why we see the dollar moving down right now. But what it really comes down to is things are starting to come back to normal. That's what it really comes down to. Last week was the party for it. Unfortunately, the media treated it like it was a game and it was foolish and it was embarrassing. And they said all these, what I consider very uninformative. They gave you a very strange answer to a legitimate question. Just as this morning, our question is very heavy. Our answer here is very heavy. It's very deep for a Monday morning, but it's a fact. And there's no getting away from it. So, anyhow, I'm done rambling about that. You're welcome to ask questions about it. I'm going to go through the norm that we always do. We look at the dollar index. We look at we look at different pairs trades. Then we move into the metals and the energies, and we look at the stock indices, and that usually does our hour. So that's where I'm at. But I'm just very happy that the adults have completed the project that they started, trying to throw out the corrupt politicians here in the States. And they are. And you're going to see it over the next 2 years. You're going to see this play out. Now, how much you see in the media is going to be very little, because they're going to hide it. Hell, right now they don't even... The national media here in the United States, just a perfect example of it all, doesn't even mention the 5 million illegal aliens that have come into the United States over the last 2 years. They don't report it at all. They don't talk about it. They don't report it. They don't, mention it. They don't do anything. It's like it doesn't exist. And now Mr. Biden has gone down to the border. He went where all the action is not. He went to a processing center that doesn't see all the illegal aliens. All they see is the legal aliens trying to apply to get into the United States. That's all they do. That's where he went. Again, the sham as usual, So let's go to the euro. There's the euro this morning. Let's throw that up on the screen here on J4X. And right there. And you can see the euro has bounced back. We thought it was bouncing back, and then all of a sudden, during the webinar, it was in its minus area. It was like, really? Really? You can see here all that strength. We were even underneath the weekly sell on Friday, and they roared it back. And the same thing's going on with the cable, too. Let's put the daily up here, though. There's the daily of the euro. You can see daily, look at that, just a big spike. This is Hinky-Ashky, so you see the lines. Let's see if we can turn it off for a second. You'll see the strength on Friday. There it is. Look at that strength on Friday. Wow. Look at it ran. It's an outside day. Lower low, higher high. That was Friday. Today looks like, when you look at the Hinky-Ashky, it looks like today is the day where all the real action's coming. It was all on Friday. It was all Friday there. And you can see here our work. You can see the green line piercing through on Friday with no problem, making that curve. We talked about that as it was doing it. We were seeing the same thing going on in our work. You can see it right there. Let's widen this out. Let's see, where's the widener? Right there. You see that move on Friday. You see the push up. We closed in a green in the daily buy. Today they're just adding to it. And at the same time, on the weekly, let me put the line in there. It makes the weekly look a little bit more clear. Right there. And so you can see here, it's been in that weekly buy for a while. Doesn't seem to be letting go, that's for sure. We've been in a weekly buy now since, was it October? And back in here. And I really think that you're going to see the dollar, go down back to normal. Let's take a sip of water. I don't even have my tea this morning. I've been so busy. So there's the strength that we expect to see. And I saw the cable doing the same thing. It picked up the weakness ahead of time. Let's see what it does on the other side of this. Let's see, where's it? Up in that. There we go. We'll put it up over here on J4X. Right there. There's the cable. You can see the same thing happened on Friday there. Let's see if we can get this up there. There it is right there. There's the cable. You see Friday was, we were in sell for a couple of days, and then all of a sudden, 3 days in a sell, looked like a fourth with no problem whatsoever. And then they, things turned in the political right direction. Let's do this. It goes here. There we are. They knew that they had a deal. I guess it was Larry Kudlow that created the deal on Thursday. So I knew that Friday, when they took the first vote, they were just doing the practical thing. The first vote was like around lunchtime, our time here in the States, like noon, 12 o'clock Eastern Standard, New York time, Philadelphia time, Miami time. It was just to see if they could see McCarthy had not gotten more votes than the Democrat. So what they wanted to do is they wanted to confirm that there were more votes for McCarthy than the Democrat, and they did. And once they did that, then Friday night they did the vote, and the 6 who didn't want to vote for McCarthy because they are real constitutionalists, they are I guess you could call them patriots, true loyalists. They want a functional Congress, not an illegal or law-breaking Congress, which we've had for off and on for the last 15 years or so now. Under Trump, they started to move back into the legal side again, but it was tough. It only lasted for 2 years, and then Democrats got control, and they've been doing something called voter harvesting, which is illegal in most of the states. They've been legalizing it now in a lot of states. So they've been doing it illegally and legally. It doesn't really matter. And now the Republicans will be probably doing the same thing. They'll be doing voter harvesting and making it an equal race again. And you'll see the Democrat Party diminish and diminish and diminish more from it. Because the people here don't want all this criminality going on in government. All right, so you see there we're getting that same action. Cables lifting up. The weekly this week, I would think, would start to go. You can see the little blue line is already moving. It's already through the 0 line. Let's see how fast by the end of the week. You can see the green line is curved, bouncing off the bottom end of its, what do you call that, the time manifold right there. You see that right there. So we're seeing that strength come back into here. And that was one of the bigger moves we've seen on a daily basis in a while. Maybe right there. When was that? Back in December 1st. So. And then from there we'll drift over to the Swiss franc. Let's put it up over here. Right. Where's the Swissy? There's the Swissy right there. You see when it's going down in value, it's gaining against the dollar. Remember, this is a dollar Swiss pairs trade versus a GBP dollar. When it says, when you put the currency, the first currency in front of it defines if up is profitable or down is profitable. Being long it. So, and you can see here it's gaining. And let's put it over on Chicago Quant right there. You see it's in the daily sell now 2 days, which means, obviously, and stayed in that week. It tried to get into the weekly buy last week. And we talked about that, and we were surprised at the strength of it. And sure enough, it's cleaned itself out over the last, it didn't happen. On Friday, it did not close in that buy right there. It did its best, and, it's in that correct track where the dollar should lose against most of the currencies because it's so overvalued. And I know there's a whole another magical conversation to have is how do you define overvalued and undervalued? That literally is a whole different concept that a lot of times is not so clear. In this day and age, I've noticed that they use technical analysis to try to define that. But it's usually a combination of like inflation and growth. And Janos has talked about it, how fundamentals don't seem to match up to the trading itself, and the days of fundamentals being able to be the defining factor of overvalued or undervalued has kind of disappeared because of quantitative easing. When you flood a system with the attitude that you're fighting for stability, not fair value. Yeah, I mean, we could easily get into a conversation. Fair value and what I talked about for the first 15, 20 minutes is the true. That is really what it really comes down to. Fair value or not fair value. How do you define fair value? And that's what we're really, that's in the first 10, 15 minutes of this webinar, that's what we're really talking about, fair value. How do you define fair value? Is it cash flow, EBITDA, Some of you probably hear those words, EBITDA. You have no idea what they might mean. It's an accounting procedure that was created to understand the fair value of companies like Amazon and Google and so forth, and try to understand that earnings itself was not the center of understanding fair value. And you know what? I think we're going to call this webinar, really, that's the title of this webinar today, is what is really fair value? How do you define the fair value of assets? And that's what the problem was. The Federal Trade Commission did not respect cryptos as an asset. People are putting out hundreds of thousands, millions of dollars into them, and they're treating it like they don't exist legally. And that's why you have all this corruption inside the crypto system, because they chose not to respect the financial side of it, when in fact people are putting life savings into these assets, thinking that this is a legitimate investment tool. I want to cash in on it in the younger years. And sure enough, if you invested in the legitimate ones, that were very solid in stability, like a Bitcoin or Ethereum, and I think there's a third one out there. I don't really pay attention to. I don't drift past those two really, because the rest of them, the fair value is decided by their blockchain technology more than purchasing it itself, and that's dangerous. In other words, we've seen many a time a product or a currency have a value, and they probably say that about the dollar in many ways. In other words, it's the technology that keeps the dollar at a high price. It's the military technology. It's the legal technology. In other words, the legal system itself. It's the innovation system, the technology that allows people to invent and grow things. I mean, you don't see an Amazon coming out of Europe. You don't see you could say this, you saw an Amazon come out of China because the government controls, was it Alibaba? And what happened to the owner of it? You don't see the American government locking up Jeff Bezos, like, what's his name? I forget the guy's name from Alibaba. Disappeared for like 9 months. He was gone. He was fighting with the communist Chinese, and next thing you know, he just disappeared. You couldn't even find him. And so, and now the communist Chinese basically control Alibaba. Somehow or another, they took it away from him by not taking it away from him. And now he talks a story like, that he's supportive of what's going on, I think. I'll tell you the truth, I don't pay attention to it. Because anything that comes out of China is controlled by the government, and like I called them, they're our angry colony. That's what they really are in the end. Because they can't grow us out of it. They can spend the money that they make from America, but they're not innovating from the money that they make from America. So, fair value is a very interesting concept. And that's where we are trying to understand these products, why the dollar is weakening. It's because we're drifting back to understanding fair value again and stopping the government choosing winners and losers. I mean, Mrs. Pelosi went into Congress not worth anything. Her father and her brother were mayors of Baltimore. She ran from the East Coast, moved to the West Coast, because they both went to jail from the criminality that they did as politicians. And now she's worth hundreds of millions of dollars because she climbed up inside that system and didn't get arrested, because they took better control than her father and her brother did. Let's put it that way. So fair value is an interesting thing. How do you define it? And in this era, I said it a few minutes ago, they define it with technical analysis and accounting procedures, cash flow. And then that answers why the dollar is so strong, is because we have the cash flow. We have innovation. We have growth more than other countries. It's a combination of all of it. And why people love China, the ones who believe in socialism love China because they see the hundreds of billions of dollars being put into China, thinking they're going to get a return for it. But I can tell you that, so far that has not happened. Matter of fact, you can see them slowly paring back, trying to find ways to get out. But the problem is, when you invest in China, it's like the cockroach hotel. You can put your money in with no problem. They'll take all the money that you're willing to invest there. But when it comes to bringing it home, that's a whole different story. And that's what's so weird about that, is that you would think money managers would be smarter than that, but they're not. So in the end result is that the fair value is starting to fall back into place again, and that makes the dollar go back down because other currencies will not be intimidated as much by a political machine here who only looks for personal opportunity. And so they can now remove the Speaker of the House with one vote, a Democrat or a Republican. They can raise their arm during the day and say, we want a new vote. So what we just went through for 4 days, getting these rules put into place and making it hard for the Speaker to have like a dictatorship power, because it's the third most powerful position, and it is it's the third most powerful position in our government. But more than that is it's the one who writes the checks. You can't spend any money in America, government money, without Congress, and that's the House of Representatives, signing the check. Not the President, not the Senate, not the Supreme Court, but only the House of Representatives. And so that should be the way people were explained what was going on. And now they call it the Jefferson Rule. It's our second president of the United States, and the one who was one of the writers of the Constitution. They have a rule. It's called the Jefferson Rule, and that is, and it's been around for a long time. Matter of fact, there was a lot of jokes going around about people wanting to talk to Jefferson, tell him how well it's still working to this day. In other words, it was able to be incorporated into this 118th Congress, 128th whatever Congress this is. That happens every 2 years. So that's what we're seeing right now. And because of it, I expected the success of it, and I expected to see the dollar go down because we're going to see more productivity out of our money in the end result. And that's something, when Democrats get full control, you see the inflation explode. That's what happened. We saw the inflation explode and money not having the value that it had before. And people were rushing around the world to put their money into dollars because it was paying 5 and 6%. I mean, what? We can put it up here. Let's put it up here. Let's see, like that. And let's see, we'll go like this. That's the Swiss. We're showing you the Swiss there. Let's put the yen in to start off with. And then I'm going to show you the bonds and the prices of the bonds around the world. And you're going to see the American bond it has a higher value to it. With the world having the same inflation problems, our bond is paying a lot more interest. And you have to wonder, well, why are you getting more money from the American bonds than the other bonds? And it's because it's the place to be. You're going to get your money back. You put your money in, you get it out. And hence, I don't think, let's see if we can even find a Chinese bond. I mean, they've gone bankrupt on so many bonds over there over the last couple of years, and the media won't tell you about it. So there's the yen. Let's put the yen up over here. And then we may even go right to the bond too and try to put it up here and see what bonds that they have. I know I have the bund up there. You can see that in the list of things. But let's go over and look at the bond market itself. And this is really, this conversation today is really, what is fair value? And how do you understand fair value? And it's not an easy thing to describe. I can explain it, and we're going to in simplest terms, but I've already described what the complicated side of it is. It's the government, and it's the lack of visibility by the government making decisions with money, and obviously it's the public's money. It's not. Let's put it this way: it is definitely not the government's money because they're just printing money out of thin air. So it's not money being made. It's money being invented by the governments themselves. Hence why gold is so hard to trade anymore. The metals complexes. Here you have record inflation, and gold looks at it like as if it doesn't exist. I mean, do you know that it exists? I know it exists. When I go to the pump and buy food, I see the inflation. All right, let's get the bond up there. And we'll just give you that as a quick example of prices. Just a simple example. Let's see, where's it at? Trading and bonds and markets and bonds, and there they are. Okay, so let's move that over onto the screen just real quick. There's a list off of CNBC. And you can see here, 1 month bonds are yielding 4.25% here in the States. They're not even reflecting a 1 month. The closest they get in the British, they're reflecting a 3.5 on a 10-year. No, a 2-year. I'm sorry, a 2-year. Our 2 years yielding 4.25% right there. But what's really funny is when I highlight some of them, you have to laugh at that. 4.8 for a 6-month bond. For a 1-year bond, 4.7. Over in the German Republic, a 10-year bond they're reflecting at 2.25. Our 10-year here is yielding 3.5. The 10-year in England is yielding 3.5. And I understand that they're tightening up. ECB is tightening twice as fast as the Federal Reserve, but then the Federal Reserve is in a position to have to feed cash to the planet. We saw swaps being done with Switzerland and so forth. Things like that are very odd. Now let's see if we can find any more bonds. I know there's another page that reflects bonds around the world. Let's see. Oh, yeah, there we go. There's Italy. So there are the bonds right there. So there's Italy's bonds. Let's see what the Italian bonds look like. And the 10-year there is yielding right there, 4.25. Up there right around, matter of fact, that's higher than the U.S. one right now. That's Italian bonds. Let's see what the French bonds are yielding. French bond 10-year are yielding 2.78 right there. Now, do you really think that you're getting your money back from that? You're not. When you buy that 2.78 with inflation at 5, let's round inflation out on the globe right now on the earth at 6%. Not thinking of Zimbabwe or Russia or anywhere else. Let's see if there's a Chinese one. I don't even see a Chinese one. How can it be the second most powerful nation in the world if they don't even have bonds? Well, because they can't, and we all know, at least I know, I report it here all the time, how they, like Evergreen or Evergrande, has gone, under, and they don't pay their bonds, and they declare bankruptcy outside, and then they take care of the investors in China itself. The communists themselves get paid back by the government. And the numbers are incredibly small to begin with, what they owe, which is really odd for supposedly the second largest economy in the world, how they only, they can't. I remember one webinar I did here, talking about fair value. We did one webinar here where Evergrande, about 9 months ago, declared bankruptcy on something ridiculous like $20 billion worth of bonds or $3 billion worth of bonds, something ridiculously small. For an economy that's supposedly $14 trillion, why is the government declaring bankruptcy on those bonds? Doesn't that seem odd? I remember saying it here. That seems awful odd. How can they not? I think it was $2 billion they had to pay in interest rates, and they declared bankruptcy instead. It's like, how do they declare bankruptcy on $2 billion? I think I remember comparing it to. We probably could go find the webinar I did. I remember comparing it, saying $2 billion is like a penny in your pocket, and you have $50 in your pocket, but you won't pay for give 2 cents. Even if it's $1, you have $50 in your pocket, and you won't pay $1 to get out of the problem. Instead, you declare bankruptcy, and it goes under. And they have. The people have been taking control of buildings in Hong Kong because of Evergrande. The government has lost them. The Chinese government has lost those buildings. They make it hard for them to take them because the laws are not very friendly towards that. but they owe them the money, and it's an international market, so they have to do something. So instead of giving them like $1 billion or $2 billion out of that supposed $14 trillion economy, instead they just declare bankruptcy itself. The government allows that bankruptcy to occur, which is really weird. And then at the same time, you say, well, that's very fiscal responsibility. Then they go and bail out everybody in China who's invested in Evergrande, but they won't invest. They will not bail out, just for $2 billion, the people outside of in other words, outside money. So you can put your money into China, you're just not going to really get it out of it. That's what it is. You'll have to live with Chinese investments and hope that you make enough profits, and they allow you to take those profits outside the country. So anyway, that's my riff, I guess you could say. That is my whole thing for this webinar, has been what is fair value? And I think that the fair value is a combination of cash flow, earnings, inflation, future growth, and then some technical tools trying to actually define those things I just described. In other words, they see the stochastic moving up in growth, and they think, okay, the fair value should be raised on that particular product or currency, or vice versa. And that's really what the fair value is in the end result, is that what you know it is now, what you think it's going to be in the future, and then you look to see if it follows that path, and as long as it's growing, then you know that it's moving in the right direction. And if it's not growing, then it's not moving in the right direction. All right, I'm done with that. Let's just go back to looking at the individual products, and I don't know. It just set me off this morning because I can't believe I'm still not hearing any decent news about the new speaker and the things that have been passed to allow the speaker and the government to function now. Individual budgets, debate on the floor, things that we have not seen in years. So, all right, let's see where we're at. There's the yen, and let's see what the yen is trying to tell us. You see it over here on Chicago Quant, breaking down a little bit. Again, it's gaining against the dollar. When it's going down, because it's dollar yen, the dollar is losing money and the yen is making money. And you can see it over here on J4X the same way. It's been moving down, and obviously the dollar has been losing against it. Let's jump over to the Canadian. Is it the Canadian? No, I guess we go to the Turkish lira from there. The Euro Turkish lira pairs trade. Let's see what they're doing with that. It's been losing of late, but look at that gain, because the euro was breaking down in value, and because it was breaking down in value, then the Turkish lira was actually gaining against it. And since we're kind of late into this, we won't go look at the dollar. We'll take a look at the dollar Turkish lira tomorrow. And then from there, we go over to the Canadian. And that usually matches up to the action in the oil market. And so you can see here on the daily, it's been gaining against the dollar. Let's put it over on Chicago Quant. Right there. And obviously oil must be moving up, and we'll throw oil up there real quick just to take a peek. And that's the euro. And there is the front month oil contract, and you can see it's gaining today. It was up on Friday, and we went into the weekly sell last week, and we're moving right back into the weekly buy. It's choppy, very choppy action. And then from there, we'll come back. We'll put Brent up there just real quick, just for those that want to see Brent. I like to see Brent. I understand the European market and energy. See the same thing going on there. Brent is trying to lift back up. We saw it down to 78 on Friday. Now it's trading almost at 81. So from there, we go over to the gold, which is obviously the crutch or the main theme of destruction of fair value. I mean, we've been trying to understand how gold can only be not. How can we be at 40-year highs in inflation and not see gold at all-time highs? I mean, we're not even at 2-year highs. you would think that we'd be at 4-year highs. If inflation's at 40-year highs, 40 years, almost half a century highs, how are we not at basically $10 underneath or $15 underneath all-time highs in gold? But instead, gold is trading under $1,900, and gold's all-time high is $2,200. So it's $300+ underneath, not $3, not $30, but $300 underneath. Like 20%. It's like, how does that work? What malfunction is there? And that's because of the interference with fair value. That's what it comes down to. And how do they interfere with it? When something is demanded by the general public, they change the way delivery can be to them. And you can see it. What's it? India makes it illegal to even bring gold into the country, right? I mean, they have all these countries are interfering with the gold market. They're actually confiscating gold at times. They take it away from the owners if they catch them, because they've passed laws to make it hard for them to have metals. Okay, from there, let's see. From there, we go over to, that is gold. So we take a look at the South African rand. So let's put the South African rand up there. They have that political situation going on there at the moment. We have the political triangle, or now it's a channel. And you can see it's trying to go down the last 2 days. And obviously, as we look at gold, it's trying to go up the last 2 days. And it's gone from the lows of, 1833 to today we're trading at 1879. So if we go, even if we call it 80 and 30, that's $50. But it's not even $50. It's like $46. In record inflation, we can't get this thing to go up $400, and it only can 2 days go up $46. That's it. And you can see we've been in a weekly buy since the 1650 area, which is even more of a laugh. Can you imagine? Gold was down to $1,650 no more than 2 months ago. It was going down as we were going to record numbers in inflation for the last 40 years. Gold was falling from the all-time highs down. Talk about manipulation. Talk about a broken fair value system. Understanding fair value, measuring fair value. Talk about a broken system. There it is, right in front of our faces. At record highs in inflation, and we see gold not even at 2,200, only playing around at the 2,100 area. They can't afford to have this stuff move like that. Oh, let's see what's going on here. I just saw some messages. My OBS is blank. What setting do you need? Oh, okay, someone's having problems. Happy New Year. Good morning. I guess streaming settings. Yeah, I'll copy paste shortly. Okay, there you go. Okay, cool. So, from there, we go to, and let's put the metals market up there too. There's the gold right there. That's silver. So why don't we do this? We've just done the two metals. We only have one, the peso. Let's finish the peso off, and then we'll go and look at the metals market more clearer, from what we're seeing fair value technically wise. We already made it very clear what we see is that it's being manipulated. But let's put in the Mexican peso right there. And you see it's dropping down because it's very sensitive to American politics. And now that the Congress has become responsible for the first time in a very long time, under the 2 years of Trump, it was pretty responsible. And that's why the Mexican peso had fallen down into the 18s and so forth. And then with Mr. Biden, they pushed it up into the 21s. And now you can see, with a Congress, Mr. Biden now is even pretending that he cares about the border and so forth, and whatever else he comes up with, anything to change the story. So you can see here it's breaking down, trying to go after these lows of just the last month. And these are some of the lowest lows we've seen since Mr. Trump was in office. You know, way down. This is that's December of 21. So let's see. From there, we go over and we check out. Let's see. Let's go back to the metals market. Right there. And there is gold, obviously. Let's put silver in there. And they've done a good job of beating silver up. I mean, money rushed into it, seeing the reason to be there. But, you know, the central banks do their best to keep it undervalued. Right there. And you see, they lifted it on Friday. And today they're trying to get it into the buy. And we missed falling into the sell on Friday of a weekly. But today we're still seeing that weakness. And that has been in a weekly buy also since, I think, early November. A week after the gold went into a buy of late October, it went into the buy a week later. And I'd imagine what we're seeing with platinum, just check out the platinum and then we'll go to copper. I saw some wild moves in copper. Let's do copper. There's copper right there. Copper is making a really bold, strong move up to the $4 area today. We're in the daily buy. We fell into the weekly sell last Friday, and here we are Monday. We're right back into the daily buy again. Weekly buy. I'm sorry. It's playing with the weekly buy. It's not through the manifolds or anything, but at least it's above the zero line. Now let's take a look at platinum. Oh, and let's do this. Let's put silver up on J4X right there. And it's trying. You can see that there. The hinky today is lifting nicely. You can see the green line trying to lift through. And so we're trying to get into it. Let's see what the weekly looks like. Right there with the silver. And it hasn't let go. It's still holding up. It's at the top end of its range. Look at that. When you tighten it up. It's at the very top of its range, fighting and battling. So in other words, it's trying to say, okay, fair value, it's going down. Which is like, what? What do you mean it's going down? But that's what it's saying. I don't believe it. I think that money will probably still gravitate towards it. I still like the metals market. I've been saying that for 5 months. We expected to see the strength here in the metals market going into November, December. We've gotten it, and it's not as big as we would hope for, but at least it's doing it, and that's a good thing. And there's copper there. You can see the strength in that. And there you go. It's over the $4 area right at the moment. Just battling its way. And then let's put it over here on Chicago Quant. You can see the platinum, which kind of leads the market normally. Let's go to the April platinum. Where is April platinum? Right there. And it's still in the weekly buy. You can see that for a fourth week. It started off 2 weeks before gold, a week before gold went into the buy and silver. And you can see now it's carrying along very nicely. And then it went into a sell there just for right with this weakness there. I guess the central banks were fooling with everything. And now they've made a nice bounce, a 10% bounce out of that move. Just over the last three weeks, basically, we've gotten a 10% bounce on the upside over from under 1,000. The low of 975, and today's high is 1,115. So that's $135 on a $1,000 investment. You're looking at around 12% gain there. And whereas gold over that same time period, let's see what we do here with gold, just for a comparison. Gold comparison right there. That same time period, gold went from 1750 to 1850. Right there. Or 1775 to 1875, $100. So it's half the gain of what platinum has done. Oh, there goes my mouse. Let's see who gave me. Someone sent me something. If it's on the hour. Oh, it's on the hour. Okay, so that might be like Apple News or some rubbish. Oh, okay. Well, this is Doc. We've had a wild morning. What is fair value? I'm trying to understand fair value. And I think that's really what it comes down to. And so that's going to be the title of this webinar today. What is fair value? And it's hard to define. If it was easy to define, everybody would be very comfortable with it, without a doubt. Let's see. Let's find a place. place to put that in there. Fair value. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, we will catch you on Tuesday. Probably not as deep, just looking at technical analysis and answering any question anybody has. So, arrivederci to all, and to all, arrivederci.